Happy Monday, traders, and welcome to the first trading day of February. The last trading day of January, last Friday, we had some extreme fireworks. And of course, that was in gold and silver and precious metals. So they saw their biggest one-day decline in history and the biggest one-day liquidation ever, where we saw gold and silver, precious metals lose over $12 trillion in the space of one day. So gold and silver on the day ended up being down around 10% for gold, and silver down about 30%. Now they closed well off their lows, so intraday they actually were much lower. Silver on the day about a $50 range, gold about a $800 range. I mean, these are absolutely extreme, violent moves. And with that 12 trillion liquidation, safe to say that there's probably a lot of traders that won't be trading for a very long time, especially in the retail trader space. Now, even though we did have those huge declines on Friday, for the actual month of January though, gold still ended up being up 12% for the month, and silver still ended up being up 20% for the month. So unbelievable action and moves that we saw in the month of January for precious metals. But look, technically silver, there was a bit of a chink in the armour on the weekly chart. So for the weekly chart for silver, actually had a bearish key reversal week. So bearish key reversals are top formations. So look, I think it's safe to say that the tops that we saw in January for gold around that 5,600 and for silver around about that $120 levels are significant highs that are going to take some time before we see those precious metals back at those levels or making new record highs. So we probably are in for a period of consolidation, and yes, we can see lower levels. But look, the market is looking at this as markets that were going vertical north, are supposed to have some sort of huge correction. So we've seen that, and the fundamentals really haven't changed for gold and silver. So at some stage during this period of consolidation, obviously we're probably going to see some very good buying levels again. So it's just probably just a timing thing. When that is, well, that's the question that really needs to be answered. Anyway, on Friday we did have some other important news that Trump finally nominated the next Fed chair. That's going to be Kevin Warsh. Now, he was a bit of a surprise in that he is a real inflation hawk, doesn't really tolerate high inflation, will do whatever it takes to get inflation lower, and also isn't a big fan of QE. Says that it's a policy that is a policy of inequality. So being a big inflation hawk, market took this nomination to be much less dovish than what they previously thought that Trump would announce as a Fed chair. And so we did see, especially in the currency market, a lot of US dollar buying. So that went against the trend that we saw last week, where the market was firmly selling US dollars. So volatility in the currency space has been there as well. It's not just precious metals. Anyway, moving along, weekend, we've seen some action in crypto space. It's not the best weekend for crypto. So we've seen Bitcoin sell off and actually trade as low as down to 75,000. And it's starting the week at the moment around at 77,000, so just off those lows. Look, crypto has been struggling for quite some time. It didn't really follow risk higher in the equity space, didn't follow the precious metals, struggled around that 90,000. And now that we're seeing precious metals sell off and seeing some volatility across the markets, that is fed into crypto market, and yes, it is struggling. A lot of talk about Saylor and his fund strategy. that his average price, he's the biggest Bitcoin holder globally, is around that 77,000 mark. So Bitcoin trading down 75,000. He's actually in the red. So a lot of talk about exactly how that may pan out, whether or not at some stage he may be forced to liquidate some Bitcoin holdings, and if that happened, obviously, we would see Bitcoin even sharply lower. But in any case, we have crypto struggling now. And that's one of the things the market is worried about, is that when you do get a lot of volatility in certain asset classes, you do start to see that feed into other asset classes, so you get cross-asset market volatility. One of the spaces we really haven't seen that yet is in equities. US equities, yes, they were off on Friday, but they are still flying high. Very close to obviously record highs, especially for S&P, which did print a new record high last week. So questions are starting to come into the market whether or not the next market to see volatility and negative volatility is the equity market. So all eyes are going to be on the open to see how the futures markets open there. This week we do have an RBA meeting tomorrow. Market does expect the RBA to hike rates. Obviously, we've had some horror inflation prints, and the employment market has been solid. So market expects them to raise 25 basis points from 3.6% to 3.85%. And this is coming at a pretty bad time in markets, where obviously we're seeing some risk off and some real extreme volatility. So the last, this is a sort of a market that central banks hate to raise into. So ASX locally here, I would not be long that. Obviously that's going to be weighed down by what's happening with the RBA. Aussie has taken a bit of a hit, obviously, in the last session or two, with the currency market going back buying US dollars, but at some stage that Aussie is going to be a fantastic buy on dips, so certainly be looking for an opportunity to do that. And at the end of the week, we do have important US economic data that comes out, is payrolls data for February, and the expectations there for about 70,000 on the headline. Unemployment rates stay stable at 4.4%. So if that result comes out as expected, it shows that the employment market certainly is stabilising, which means that less pressure on the Fed to cut rates. So look, a lot going on in these markets at the moment, and yes, all eyes this morning certainly going to be on how precious metals open as well. So look, you've got to be careful out there, and definitely work stops. So good luck with your trades. We'll check back in with you shortly.